Hello everyone. In this video, I'm going to discuss preparation of various ledgers and treatment of various items in cash flow statement. Now I'm going to discuss the items which have double effect in cash flow statement. So here are those items. First is provision for tax. Children, please note, if provision for tax is given only inside the balance sheet and no additional information is given related to it, in that case, current year figure will be added in notes to accounts and previous year figure will be subtracted in fourth part of operating activities. The second is interim dividend, which you will always get in additional information. It will be added in notes to accounts and will be subtracted in financing activities. Next is proposed dividend. For this, you have to remember only previous year figure will put an effect. There is no effect of current year figure, whether you will add it or you will subtract it. It will be added, the previous year figure, it will be added in notes to accounts and previous year figure itself will be subtracted in financing activities. Next is interest on debentures. It will be added in second part of operating activities and will be subtracted in financing activities. Next is interest on investment. Being it is our income, it will be added in investing activities and will be subtracted in second part of operating activities. And the last is refund of income tax. It will be added in fourth part of operating activities and will be subtracted in notes to accounts. I hope these items are clear to you. Now let us move towards first ledger, which is fixed asset account. First of all, prepare 4 columns, particulars amount on the debit side and the same particulars amount on credit side. Now on the debit side, 3 items will be posted. The first one is true balance brought down, which is our previous year figure, and it will be given inside the balance sheet. The next is two statement of P&L, which will be profit on the sale of fixed asset. Next, to bank, which will be purchase of fixed asset. If we talk about profit on the sale of fixed asset, it will be subtracted in part second or B of operating activities. And if we talk about purchase of fixed asset, it will be subtracted in investing activities. So children, you can note down that debit side items we are subtracting somewhere in cash flow statement. Now let us move towards credit side items. The first item is sale. Sale we will mention by bank. Okay, in bracket we will write on sale. Then by statement of profit and loss account, that is loss on the sale of fixed asset. Next is by depreciation, it will be depreciation provided, and then by balance carried down, it will be current year figure of fixed asset, which will be mentioned in balance sheet. So 4 items are falling on credit side. Now sales will be added in investing activities. Loss on the sale of fixed asset will be added in part B of operating activities, and depreciation will be added in part B or second part of operating activities. So you can see credit side items we are adding somewhere in cash flow statement. So I hope fixed asset account is clear to you. Now children, I'm going to discuss with you accumulated depreciation account. But make sure this account we will prepare only in one condition, when accumulated depreciation is given inside the balance sheet as well as in additional information. Alright. So the first item on the credit side which will be posted is by balance brought down, which will be opening balance or previous year figure. Alright. And it will be given inside the balance sheet. The next item to be posted here is by statement of P&L, which will be depreciation provided. Okay, and sometimes depreciation provided is given in additional information, not sometimes, rather always, right? So you mention over here and it will be added in part B of operating activities. Now sometimes such type of line is also mentioned in additional information. Let me read out for you. An asset costing rupees 20,000, accumulated depreciation rupees 5,000, sold for rupees 15,000. Now you can see accumulated depreciation is 5,000, okay, which is directly putting an effect on cost price of an asset. This accumulated depreciation 5,000 will be posted into fixed asset account here, which will be later on transferred to the fixed asset account on credit side. Alright. And the next item to be posted on debit side of this ledger is to balance carried down, which will be current year figure. Alright. Now let us proceed towards provision for tax account. The first item to be posted here is buy balance brought down, which will be previous year figure. But still, I want to mention here that provision for tax account will be prepared only in one condition, when provision for tax is given inside the balance sheet as well as in additional information. Okay. So the second item to be posted on credit side is by statement of P&L, which will be tax provided. Okay, and it will be added in notes to accounts. On the debit side, the first item to be posted is to bank, which will be tax paid, and it will be subtracted in part 4 or part D of operating activities. The second item to be posted here is to balance carried down, which will be current year figure, and you will get inside the balance sheet. If tax paid is given in additional information, then tax provided will be your balancing figure, vice versa. If tax provided is given in additional information, tax paid will be your balancing figure.